Welcome to your weekend edition of the TraderMerlin Show. Man, what an ugly day, and it looks like it's going to get uglier. I actually, it's funny, I mentioned that the bar chart article that I wrote didn't really get any readers. I guess people just don't like looking at the economic data. However, if you look what happened today, it's driven by two things, and predominantly two things. Number one is banking and financial, which made yesterday's show very appropriate, and also the economic data that came out today. So lots to talk about. I'm excited, and I have a nice tall glass of Angels. I went tall today. Angels Envy. Cheers, everybody. Happy Friday. I hope you did well today. Yeah, it was a wild ride, and I have a bunch of stuff to talk about. So let me take a sip of this, and let's get rocking. I keep leaving notes on my door. Uh-oh. Oh, man, I don't know which one that one is. And FUD, you're right, Big Eb. And actually, if you look at the graphic I created for today, which, of course, I haven't had a chance to get everything prepared because I'm running around doing a million different things today, but still trying to make sure I do your show for you. Let me real quickly bring up the graphic. I can show you what I prepared for today, which I thought was pretty damn funny. Some of you think it looks a little bit evil and scary. Well, it might just be evil and scary. Here it is in all of its glory. I told my AI program, I want a trading floor with kind of pandemonium and chaos and lots of red. And this is the picture that came out. I like it. Don't worry that the hands are completely distorted and looking all crazy. But unfortunately, the lifestyle of being on the trading floor is gone. And I would love to have been there on a day like today where it was pretty much just red, sell, panic, and people freaking out. I personally like these days. I did follow my talk track from yesterday and sold puts on JP Morgan, Bank of America, and XLF, which is, you talk about catching a falling knife. I mean, that's incredibly risky. I didn't put a lot on, but still open up those trades because I'm happy owning JP Morgan long term as well as Bank of America. But let's start our discussion. Let's see, where do you guys want to start? We could start with the economic data. You have your choice. Economic data, banking sector, or the donkey of the day. I'm chilling in the chaos with my drink. I actually have a really good donkey of the day, which I think might be a fun one, and it ties into the financial sector. So I am open to thoughts and whatever you guys would like to do today. I'll wait a couple moments to get the few of you who are joining me on this Friday afternoon to type in your chat which one you'd rather have. We'll start with either the economic data, which I think is pretty critical. All right, Pepe is first. Pepe wins! We'll do economic data and whatever the second one, and then the donkey. So there we go, Rob. You got my order planned out. We'll do economic data, donkey, and then we'll go into the banking. We'll leave the banking for last since we already beat up that one yesterday. All right. So on the economic data front, if you watch the Monday Morning Must Knows that I did for Online Trading Academy or read the blog post or the article I wrote for barchart.com, I really was putting emphasis on the employment numbers, the unemployment numbers to be specific, because if it was higher than 3.4%, that all of a sudden means that the Fed may have to reconsider its 50 basis point increase. And I emphasized that one yesterday. Well, let's take a peek at that economic data. And I've got 30 browsers open here, so it's going to take me a while to navigate through them. Here's your economic data for today. I know that a lot of people look at non-farm payrolls, which would be this non-farm employment change. Well, yeah, that was good. It was better than expected. We were previously at 504,000. They expected half of that at 224, and we came out at 311. So a little bit better than expected, but still it's a contraction from 500,000 to 300. That's a pretty big drop. But I wasn't really focusing on that number. For me, it was this one here, the unemployment rate, which, as you can see, expectations were to stay the same at 3.4%. We actually came out at 3.6. Now, here is the chart of the unemployment rate. I'm going to zoom out here so you guys can see the bigger picture. This is a remarkably good, even 3.6 is great. We should be so happy to have a 3.6% unemployment rate, unless you're Elizabeth Warren, and apparently we should have a 0% unemployment rate, which would be not possible. I'm going to zoom in to past the pandemic just to put it into perspective. We've really been flatlined, and honestly, it's hard to go lower than where we are currently at. So we did see a pop today. You can see the most recent candle has been updated. Thought there was to be 3.4, jumped out at 3.6. Now, why is this important? Again, the Fed is going to be motivated or influenced by a couple factors. Number one is inflation, and they're doing these things to fight inflation. Well, if their aggressiveness towards inflation starts to hurt other areas of the economy, then they might backpedal a little bit. And we heard on Tuesday Jerome Powell say specifically, we are keeping the pedal to the metal. We'd much rather be more aggressive than not aggressive. And he cited unemployment numbers, it being your historic lows. So I thought, well, this could seriously have an impact on the Fed funds futures. And lo and behold, you might remember on, I think, Wednesday or Thursday, we had a 79% chance of a 50 basis point increase. Look what happened today. This is part of the reason you saw it tank. We backpedaled immediately. We went from 79%, dropped to 39%. Why is that? Unemployment numbers, folks. And again, I made the point yesterday that I believe right now, the unemployment number was more significant than CPI will be next Wednesday because we have that trend in place that's slowly coming down on CPI. As long as it's going down, the Fed can argue that their actions are justified. However, sharp surge here in unemployment all of a sudden makes everybody go, uh-oh, maybe the Fed cannot raise as aggressively, and we saw that about face. Really interesting. A month ago, there was a 9% chance of a 50 basis point increase. A week ago, it was 28%. Yesterday was 68%, and now all of a sudden it dropped back to 39. So the odds-on favorite for a rate increase is going to be 25 basis points at next week's meeting. And if you look at the historical stuff, let me do a little bit of live channel surfing here. I'm going to go out to the 22nd. Actually, it's not next week, it's on the 22nd. Here is the Fed funds rate for the U.S., and here's what I think is going to happen on the 22nd. You notice that we were way down here at basically 25 basis points or less. Then all of a sudden we jumped to a dollar. So we had some 75 basis point increases in here. Then we went to 50. The last one was 25. I don't believe that they'll do 50. I think that they will continue to do 25 at every meeting going forward until the Fed gets the results that they want, unless there's something drastic changes. So I don't think that what you would see is they went 50 to 25 back to 50. I think they will stay at 25 basis points, and that's what reflected in those Fed funds futures. There was that chance of getting 50, but I just don't see them changing their direction. They're at 25. They'll stay at 25 for a while. Tom says, does total employment matter to the Fed? Unemployment is skewed low due to lots of teachers, cops, etc. that retired during the last few years. Well, that's a good point, Tom. And we can make the argument that the U3 number that we look at is not relevant, right? That's the number that politicians like to use, but it removes people that aren't actively looking for work. Well, those are unemployed people. There's a certain point where you fall off the books and you're no longer part of the unemployment rate. So let me go here and look at U6. Sorry for the silence there, unemployment rate. You can go out to believe it's the Bureau of Labor Statistics that puts this number out. Yeah, the BLS. And I'll share this with you as soon as I bring it up here. All right. So to Tom's point, if you look here, you can see the U3, which is really what the U.S. looks at, right? That's our current numbers right there. We were at 3.6 is the most recent reading that just came out. You can see them highlighting in like a bold blue. But most people believe we are actually at the U6 rate, which is, I'll read the definitions to you. So for the podcasters out there, and again, thanks to the podcasters for torturing yourself every day without visuals. U3 says total employed as a percentage of the civilian labor force. That's the official unemployment rate. U6 says total unemployed plus all persons marginally attached to the labor force plus total employed part-time or for economic reasons as a percent of civilian labor force plus all persons marginally attached to the labor force. So it basically says you're including more people in the results in the U6, which puts us at a much higher unemployment rate, which is about 6.8, and I would argue that probably is where we are at. That said, in the article I wrote for Bar Chart, the historical average going back into the 1940s, I think it was 1940s, 1920s, all the way through today is 5.7%. So we are still at phenomenal levels with regards to unemployment, but as I mentioned, it is going to shift the perspectives of the Fed going forward. So next week, again, Tuesday, you've got CPI. Wednesday, you've got PPI. Thursday, you have some other stuff coming out. What's happening Thursday? Oh, Thursday is going to be the ECB with their rate announcement expected to jump 50 basis points as well. So, these last couple weeks, this one, next week, and the next week, 3 weeks in a row of just absolutely heavy-hitting financial data. So there's your economic stuff, at least that level of news that came out today. I will show you more of what happened today just so you guys can see that picture. So let's go back to our Friday results. You can see average hourly earnings declined. That's not good. That means less money that people have, but not that critical. It's not like a huge data point, but it is showing a contraction there. The non-farm payrolls numbers were pretty damn good, much better than expected, but still, I'm focusing on the unemployment rate, and that was what caused the bearishness out there today, in my opinion. So there's your start for your economic. Now, let's do the donkey of the day. And I don't usually do too many donkeys of the day. You know, they say don't talk disparagingly of other people. It's not good. It shows little of yourself, and you really shouldn't, you know, da-da-da. Listen, sometimes I think that there are people that deserve to be called the donkey of the day because you look at me and go, you're a jackass. So I'm hoping that this works, and I'm hoping that I don't get shut down because I may get shut down from YouTube. At least you watching live, you'll get to see it, but they might edit it on the replay, so I apologize if they take this out. But I want to play something from 2008, and here is my donkey of the day, Jim Cramer. And I'm going to let this play for just a second. Let me know if you can hear the audio.
Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is really, look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Oh.
Okay, just so you get a sense of what's causing the agony by this point, I know you...
I'll leave it there, but you guys know what happened. 6 days later, Bear Stearns, gone, dissolved. So why am I calling Jim Cramer the donkey of the day? Because, Merlin, that was 2008. Who cares? That's old news, right? Look, it was, and I agree with Rob, freaking awesome. It's so great because he's so passionate, he's so into it. But then, you know, sometimes you just got to look at Jim Cramer and go, dude, do you wake up every morning or some mornings and just think, I am absolutely screwing over so many people that watch my show? If someone watched that show, they felt confident buying Bear Stearns, they loaded the boat, and at the end of the day, you know, a month later, Jim Cramer, I'm hoping that he sat at home and cried himself to sleep going, man, I absolutely effed people, man. I screwed people over. Bear Stearns was done. You lost everything. Gone. So that's the beginning of my donkey of the day.
You've been talking about it.
But what I want to go into is a little bit more current. So let's go show you another video that came out today. And here it is.
The ninth best performer year to date is SVB Financial, don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year, they could come back. Yeah, some of them come back here with the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial.
There we go. Thank you. I muted it so I didn't get any feedback. I got it now. So, you know, why does this bug me? Well, I called him the donkey of the day for a couple reasons. I know, audio's fixed now. That he does all these calls and he doesn't own up to it. You guys know if I make a real bad call, I'm going to own up to it. I'll apologize for it. And again, you have to make your own decisions. I'll tell you sometimes what I'm doing and what I'm in. And there's times where I just get it wrong. And that's just part of being a trader. I've never really seen him own up to it. I've never really seen him say, hey, I really screwed you guys over. I apologize as a host. You should. You should have audio now. Anyway, you might have seen this tweet that came out today, 5 hours ago, and this drives me nuts because I sold JP Morgan puts. I believe that JP Morgan will walk away from this fairly unscathed. What I think you're going to have is a lot of banks get under attack because of what's going on with our senators going after any bank that does anything with crypto and digital assets. I think that right now regulators, that's the hot seat. Wait for them to get reelected, go after, protect investors. Okay, I'm all for that, but don't start shutting down banks, etc. So we look over there. It's weird. Some of you say I have audio. Some of you say I don't have audio, but my microphone's popping, so I should be good. Here's the tweet. JPM is a fortress. And it's actually kind of funny. a lot of people right away are like, uh-oh, there goes JP Morgan. Yeah, there you go, Chase, you got it. So that's why I'm kind of laughing at it. It's because I don't really listen to Jim Cramer. I see some of his feedback that comes through, and I'm like, oh, God, I'm going to get burned by this guy. And unfortunately, JP Morgan was on his hit list. He called it a fortress, which means he's extremely bullish on it, which means I'm probably going to get my butt handed to me on my JP Morgan puts that I sold. But it's all right. I actually sold, I forgot the strike off the top of my head. I can look at a chart and show you. But I sold next Friday. I got just over 1% for next Friday puts on JP Morgan at a fairly decent price. So that was pretty good. Anyway, that's my donkey of the day. And I tell you, I could do Jim Cramer's donkey of the day quite often. It really, I got to question CNBC at a certain point. If there is actually a publicly traded instrument that does the opposite of what Jim Cramer does, you might want to reconsider that person as your host. You might want to reconsider that this individual is talking to your millions of viewers, giving them advice that sometimes is decent. Sometimes it's influenced by the powers that be and the people who are telling them what to say on TV. Sometimes it's outright garbage, like it was with SIVB. I mean, if you bought that one, you lost a ton. Now, a big shout out here. Let me bring up a graphic. I'm going to show you this little picture right here. And this was sent to me. Make sure I give proper props where props are due. Let me bring up my email here real quick just so I can make sure I get the name here. This is from... where is it? I'm going to say Rob? Yeah, it's from Rob. So Rob sent this graphic over, and you got to check it out. You have the 105 price tag, and keep in mind this thing a couple days ago was trading at a much, much higher price, right? You had SIVB was trading just a couple days ago at $275, and then it got lock limit down. It froze down $161 per share. Here's the chart of it. You had a 60% slide yesterday. Today, they halted trading. Thanks, Rob. I appreciate that one coming in. Yep, this is from Rob. He screenshotted his trading platform, and what's noteworthy here, it's still frozen, right? You can't do anything with SIVB, which is why I told you guys stay away from the risky ones and stay away from SIVB. Check this out. Here's your bid and ask, $39.25 by $39.49. Okay, for those of you who might be somewhat new to trading and investing, let me explain why this is so significant. Typically, if something is halted, and I'm just going to use an easy number. Let's say something's halted at $50. What that means is the exchange comes in and says, no one's touching this thing. You cannot trade it until we say it's okay because there's pending news. Of course, the pending news was that the FDIC basically came in and said, this bank is done. We're shutting it down. That's not good, right? When they come in and say, your bank is done, close the doors, we got to figure out how to do damage control here, that is absolutely awful. That said, let's say your stock is at $50 and it gets halted. What typically happens, as someone who used to make markets, I used to buy at bids and sell at the ask, what I would do when something was halted is if it got halted at $50, I would wait and see what people thought it was going to trade it at. And let's say that the bid side, meaning that's the price that someone's willing to buy it, was $15. Okay, I would drop my bid to $15, and typically the ask, which is where someone's willing to sell it, would be like $100. So you're the $50 price in the middle because you don't quite know what that news is going to be. So the spread gets incredibly wide because people are just going, hey, I don't know where this is going to go. If it pops up with some news, hey, I've got my offer to sell it at $100 a share. Maybe I'll get taken out and do okay there. Or it crashes and, hey, I buy it at 15. Hopefully it'll bounce from there, right? That's just trading a really large range. What's significant about this is there is no optimism. Zero. There is not one glimmer of optimism at all. And how can we tell? Well, when you look at the bid and ask, notice that the bid is currently about $66 lower than when it went into the halt. But the ask, you would expect in a normal market when something's halted, that ask to be higher than the price before it went into the halt, and it's not. It's actually way lower. So basically that's telling you that everyone thinks this thing is tanking. I'm actually really surprised to see people bidding it at $39 because if this thing gets halted and scuttled, do you get zero on your dollar? Probably not. I still wouldn't touch it, but thanks for the screenshot there, Rob. That's pretty interesting that you see the bid and the ask like this very close. Normally it gets incredibly wide. In this case, it's everybody out there, buyers and sellers, going, this thing's garbage. There's problems here. Are there intraday scalping opportunities on Cramer buys? Sure. I'm sure there are, Tom. Absolutely. I just don't have the stomach or the ears, or I just don't want to listen to his talk track, right? I'd rather make my own decisions. But can you play him? Sure. you know, if he's good for one thing, is he's creating movements in a lot of stocks that may not have a lot of movement, right? He single-handedly can create volume. He even talked about it in the video that I recommended you guys to watch, which was if you go to YouTube and type in Jim Cramer market manipulation, one of the best videos you'll see out there. It will completely change your perspective of how these financial markets work, and it will make you think this. The financial markets are corrupt. They're deceptive. I'm being lied to. I'm being manipulated. And I just need to understand how this game is being played. Otherwise, I will be played. Kind of like the person at the poker table. If you walk up to that poker table and you're trying to find out who the sucker is, it's you. Right? Anyway, I could go on and on about that. But yeah, there is opportunity there, but I don't touch it. I could care less about Jim Cramer. I have no desire to watch his show and listen to his talk track, which is totally scripted. I prefer people who can actually think off the top of their head with no script and no teleprompter, which is why I do my own show. Kramer sounded drunk when he was talking about it. He did kind of sound, we slurring some words there, yeah. Tom says, I don't scalp, but I saw a few minutes and hours of movement after he said, yeah, he creates moves. Yep, absolutely. Yeah, and Oliver's his thought in the 3-day OTA class. Share it with people, man. It really is important that people see that, because I can't believe he actually gave that interview and talked about it the way he did. What I think is interesting is it really does show you I believe it's very truthful. I believe it's really key to understand what he says in there. And he says, oh, I didn't do any of these things. I call BS on that one, I'm certain. For those who might not know what I'm talking about, he would talk about, let's say he's got a big position in Apple and he needed price to go up. He would foment, and he spelled it out twice. He goes, foment, which is you create an impression that something is happening in the market even though it's not true. That is illegal. It's illegal to foment and create artificial news to create a truth. And he goes, in order to survive as a hedge fund manager, you have to lie and create a new truth to move things. So what he would do is he would issue some bogus talk track to news reporters. He's like, you'd call up somebody like the bozo at the Wall Street Journal or CNBC. It's like, dude, you work for CNBC. How could you say things like this? And feed them some bogus news that Apple's doing a big deal with Samsung just to pop the price so you can now unload all your shares. It's like, and I agree 100% with you, Pepe. He says, how can the FTC allow Cramer to tell people what to buy or sell? There's disclaimers on there. And more importantly, if Cramer's doing all this stuff, then let's track the performance of his trust and see, is he front-running any of the positions in his trust? For example, when he's out there saying, hey, buy SIVB, I think it's great. Did he buy SIVB for his charitable portfolio 2 weeks before that, knowing that saying that on TV would cause that security to pop to the upside? 16th largest bank out there, Silicon Valley Bank. And, the tough part about this one is it will impact a lot of different businesses from the funding perspective, right? Silicon Valley Bank, again, is not a retail one. Tom, Oliver, Naum, Rob, Ganesh, Kabir, you guys, we're not going to have an account. It's not like that kind of bank. It's not a Chase or Wells Fargo. It's mainly institutions where big firms are getting capital to do big things, right? Whether that's digital exchanges, which is what Silvergate got in trouble for or shutting down for, or just investing in projects where you lose your capital and people not being able to repay it, right? The FDIC gave them a chance to find capital in order to shore up the shortcomings. They didn't find funding. FDIC stepped in, shut them down. And the good news is this isn't going to be an implosion like an FTX type of thing or a Terra Luna, but still it's a very bad sign to have a bank. I mean, a bank like this shut down. Not giving it a chance, just basically, it's done. Here you go. Let's see. A lot of sad talking heads with SVB investments look sad. I'm sure they are. I'm sure they are. When you sold XLF and JP Morgan calls, how far out do you sell if you don't mind me asking? I was looking to get 1% for the week. So at the time, I can't remember off the top of my head what the strikes were, Kabir, but it was looking out at what 1% away from current market was. So I think I got $1.30 on my JP Morgan put, and I forgot what I got on the Bank of America, but XLF, pretty much the same thing, 1%, but just for 1 week, right? Which is still taking a lot of risk. You're looking at 4% rate of return for the month, which isn't phenomenal, but I think financials are going to do well. You still have yields rising, so I think in the long haul, the banking sector will be fine, but might be a choppy road from here. All right, great comments, great questions, good chat going on in the room. Love it. You remember when Kramer said the oil industry was dead and oil went negative? No, I don't remember that, but that's actually a pretty funny comment. That tells me the ignorance of you. There's no way you could have said with a straight face in that April moment when oil went negative $40 a barrel that oil is dead. It's just a simple understanding the structure of how oil futures are constructed and what happens from a delivery perspective. That's really all it was. To say that oil is dead, what do you think, we're going to just snap the fingers and no longer going to need oil? All right, everybody, drain your cars and put in some brake fluid in your oil just because we don't want oil anymore. Yeah, just kind of crazy for him to say those kinds of statements when you can't say that we're done with oil. We're trying to push away from oil, but still, we're not going to snap our fingers and be done with petroleum products altogether. No way. All right. Tom says Kramer's original hedge fund manipulation video was an online show when no one watched stuff online. He probably thought it would fade away. So what I believe happened was it was designed to be for it was designed to be for hedge funds who paid a subscription to this service to learn more about how to be a hedge fund. And apparently whoever recorded that, Aaron Task, I believe, was the guy who recorded it. I don't remember what specifically it was for. He ended up releasing that video, and man, that's one of those like having your sex tape released, right? I'm sure Jim Cramer was like, hey, hold on a second, man. This is supposed to be for institutions only. I don't want this on retail stuff. But unfortunately, yeah, that tape's released, and I'm glad it was. I think that a lot of people have blinders on with how the financial markets really work, which is, again, why I love doing this show. I have no, I'm not beholden to anybody. I don't have any sponsors. I have nobody telling me what I can and cannot say. And, much of this is my opinion, but it's rooted in fact. When you look back, if you think that these markets are fair and efficient, looking out for your best interests, I encourage anyone who doubts that or thinks I'm over embellishing on it, just simply go to YouTube or go to Google and type in any financial firm that you want, the most reputable firm that you can think of, and just type in the word settlement afterwards, and you will see time and time and time again, these firms are paying hundreds of millions, if not billions of dollars worth of fines for fraudulent activities, deceiving investors, misleading information, front-running of order flow. It's garbage on a colossal level. But again, somebody like Goldman Sachs can issue fake news, they can do bad upgrades, they can front-run orders, they can manipulate a currency market and make $10 billion off it and pay a $100 million fine. I'll tell you what, if you and I could get away with that in our regular lives, we'd have a lot of criminals in this room. I mean, imagine if you robbed a bank and got $1 million, but your fine was only $100,000. I'd be right out line robbing that bank again tomorrow if that was the case. I make $1 million, but I pay $100,000. Sign me up, man. I'll be stealing every single day if that was the legal system. Unfortunately for you and I, if I rob a bank and I get $1 million, and not only lose the $1 million, I got to pay all kinds of damage, and I'm going to go to prison for quite some time. Yet all you have to do is run a financial firm, and that doesn't happen. All right. Are you answering questions that were left on your... I am. JB, I just got on a talk track today. Let me type it back in the chat, JB, and I'll see if I can get to that one. I know you sent in some, and there it is. Let's see. So you asked about setups and higher time frames. Let me do a show on that specifically next week, so I'm going to guess. But JB, I did get your comments and questions. And just so you guys know, JB sent in a really good one. I would encourage you guys to do this either below a YouTube video or just email me at TraderMerlin@gmail.com. He says, for today's show, could you touch next subjects, setting up trades on higher time frames and day trading, avoiding shakeouts. One of the things I don't want to do on this program is I'm not going to go into building trading strategies and techniques. And that's going to be go to Online Trading Academy, go to some other school if you want to learn that stuff. But I'm not going to be your one-stop, school and education. I'm going to do a lot more psychology, talking about trades that I go into. But I'll go through the basics of that, JB, for you. George Soros is one of the big manipulators. Yep, absolutely. Google Jim Cramer, Mad Money host, declares fossil fuels dead. Oh man. And it's funny. I disagree with that statement, but he said it. There is no different from BlackRock and Wells Fargo pushing media to talk about renting homes. Yeah, it's all a manipulation thing, which is why I always tell people don't act impulsively. If you react impulsively to someone's news or press release, you're part of the manipulated process. Stop, read it, look at it, evaluate it, and go, okay. how is this going to impact this market or this sector or this industry? And I think that way you do much, much better. So let's quickly go, since I had 3 main talking points for today, which is going to be economic data, which is the unemployment, information and figures. Number 2 is going to be the donkey of the day, which is Jim Cramer. He can be the donkey of the week for all I care. And then the last one's going to be talking about this banking. So let's do banking, and then we'll wrap up and talk about overall markets. Let's go to that one, not my junk mail account. I have multiple emails, guys. So here is the banking sector. As I mentioned yesterday, I went to bar chart. I opened up the constituents of XLF, and I downloaded all those and input those into the TradingView platform that I've got running right here. So you asked about First Republic Bank. I don't know that much about them, but obviously down 15% today, and really they were $120 4 days ago, and now they hit an intraday low today. Wow, man. An intraday low today of $45. You know, if this is that catching the falling knife, Ganesh, I say you've got to be really, really careful playing with any of these. I mentioned the 3 financials I went after, the ones that are big and have huge exposure in so many areas. Here's where I think the big problem is going to lie for Ganesh and others out there that are looking at buying some of these ones. I'm not smart enough, and I have not dug into the details, the financials of saying, where is First Republic Bank's business? Right? If they are looking at funding all these tech startups and getting into cryptocurrency companies and digital assets and mining companies, any bank that has the primary focus on those markets is in deep shit. Now that I said that, I have to have a sip of whiskey. Every time I swear, I got to drink some whiskey. Every time that those banks open up new accounts for, like I say, Riot Blockchain or Marathon Digital or even Coinbase, right? If that's their main business, I think that they are in trouble because regulators are going after it. Now, if they're a venture capital type of bank that's doing big lending and starting up different industries and they're spread around and have a lot of different approaches, I think that they're less vulnerable to being shut down. This SIVB, Silicon Valley Bank, might be one of the first dominoes to fall. I think there might be other banks that go down with this. So it looks enticing. I mean, oh my God, when you look at this chart, it's like, holy cow. We'll go back to the peak before this, which was on February 2nd. From peak to trough, this thing dropped 69% in 25 trading sessions. That's brutal, and even more staggering is how much it's fallen just in the past 3 trading sessions, which is 60%. So, Ganesh says FRC has a good personal finance bank. That I don't know. I don't know the inner workings of all these banks. You know, I know a lot, but I can't follow all of them. You know, I would be looking personally at companies like Charles Schwab. Charles Schwab's not in the business of underwriting or underwriting crypto companies and going out there and, you know, funding all these ones. They're just getting whacked today. Like Schwab was another one I was actually looking at potentially buying today. But you have Silicon Valley Bank. That's their approach, right? They're going after tech startups, which a lot of techs are digital assets, blockchain, that type of stuff. You've got Signature Bank also having exposure to that. So they, they got slaughtered again today. I wouldn't touch that one. I don't know about FRC. If I was looking at buying some of these, I would really look at what they do, right? For example, AIG. Right, this is insurance, really. I'm not so concerned about AIG, going bankrupt because of this. Maybe they have some exposure in insuring some of those companies, but it's a different story. This isn't a venture capital underwriting company. Same thing, like I said, with Charles Schwab or Ameritrade or E-Trade. Those are primarily focused on the trading side of the business, and I think that's very different. You look at the ones that I was looking at, just Bank of America, for example. That's more going to be retail stuff. Huge drop today. Well, at one point it was down huge today, but there's your Bank of America chart. I'm catching a falling knife on this one, but if I get put those shares next Friday, I'm actually okay. I believe my strike price on this was 30, so I'm really close. I got actually pretty good premium. I think on this one I got 1.5% on the 30, and then JP Morgan, I'm 132. So here's the JP Morgan. So my strike price is 132. Let me bring that one up here. I'll double click that just so we can have it up there. And again, that's by next Friday. It could easily get down below there. Unfortunately, I did not wake up right at the open. I wish I would have, because I would have gotten so much better premium. It would have been ridiculous. Unfortunately, I did not. But some of these are probably going to do good. Citibank as well, right? Citibank will probably weather the storm. So I think will Wells Fargo. So will Berkshire Hathaway. But if you dig through there, You might want to pick some out here that are the ones that have exposure to the digital asset world and more on the VC side for tech, and those are the ones I think are going to have the biggest problems. Avoid those ones. That's why I went with XLF just as an overall proxy. I believe I had the 30s on it. No, it has to be the 32s. It's pretty close to current price. I think I'm the 32 on XLF, and that got me over 1% as well for 7 days. So there you go. There's my bank track. Excellent. Now, from there, let's go away from the banking sector, which, of course, is just getting absolutely murdered, to some better stuff. And I say better. I'm going to use different markets today. As you can see here, I generally go off the futures, but, of course, as we get rolling into new contracts, these futures really start to, they start to have really weird numbers because, obviously, NASDAQ wasn't down 0.32% today. So I'm going to use the ETFs for today. Start at the bottom and go to IWM. So IWM down 2.88%. Again, we talked about this being the canary in the coal mine. Loving that Corey and his group were talking about being short this bad boy. I hope that they are still short that one. There's still some good downside move here for IWM Russell 2000, leading the charge to the downside over the past 5 trading sessions. So for this week alone, you're talking almost over an 8% slide for Russell 2000. Ugly day, ugly week, and we'll see. It's a good thing it's Friday. So this has a chance to stop, catch its breath. My guess is you'll probably have a gap down on Monday and then start to rally back up a little bit. But you do have kind of a pretty decent level down there around 165 on the IWM. Let's move up the ladder and go to the SPY, the S&P 500. Similar picture. I had this line drawn in as kind of being the top end, 389. I had as kind of the top end of a supply or demand zone. Well, we knifed right through that one today, ripping down and closing below the demand zone. So now your target's going to be somewhere around 380 for the SPY. And again, just because we're doing it for the high to low, S&P 500 from high to low, about 5.56% trading range. For the week, though, you're talking a decline in the S&P 500 of 4.84%. Ouch! That has got to hurt. Do you prefer trading futures, ETFs, or stocks? All of it. I prefer trading options on ETFs, personally. That's one thing I really enjoy doing. Let me go up this list. So we had the S&P. Let's go to, I can do the Bitcoin futures. Bitcoin just still looking ugly. And of course, because they're going after, as I mentioned yesterday, these regulators are going after the banks that onboard into the crypto ecosystem, that's going to have a big impact on Bitcoin. Plus, you also have Mt. Gox returning 144,000 Bitcoin to people, and that could cause some selling pressure as well. So I think crypto is going down even more. Let's look at the triple Qs. Right, here's your NASDAQ 100, which conveniently closed right at that low. The low that we saw back on March 2nd was 288 on the triple Qs. Today, we closed at 288. So right on it. We didn't close below. That's actually a good sign from a demand perspective, although I kind of feel like momentum's going to keep on pushing this one down. That means your next target is substantially lower, down around 277 to 273 on the triple Qs. All right, I'm almost to the top here. We've got the Dow. Give me a little diamonds. Girl's best friend. Another ugly chart, even though it's the Dow, and everyone thinks the Dow is so great. Well, on the week, you're down 4.48% on the Dow. Today, having a decline about 1.04%. Technically, we are at a demand zone that goes back to November 3rd. After that, you've got a long way down to about 303, which would get you close to 30,300, considerably lower than where we are right now on the Dow. So momentum's looking bad. I think that the trend is showing. Short them if you got them. Look bearish. Let's see. Crude oil. I don't know what to say here. Crude oil, while it was up, at least it's saying here 1.27%. It's just traversing sideways. I'm not seeing anything exciting here happening with oil. So unless you're Tom Barr, this chart's not that exciting. Love you, Tom. And lastly, gold. I kind of like this one. I am, as you know, I'm long gold, and I'm also long a lot more silver, which has been kind of painful for me over the past couple days. If you look here, you've had a 2-day rally in gold, which has been phenomenal. Just great move, although it came right back up to that red line that I've had drawn at 1876. If I were to extend this out, which probably doesn't need to be there, we came right into that little yellow zone and sold off. That was what was supply. What was demand now becoming supply, and we popped right into it. So, we could theoretically adjust this box and make it look like that, right? That's your big box right there for gold. You're back in the middle of it. Let's see if we can get up to that 1900 and start rallying even higher. Now, because of this, yeah, JP, we'll look at natural gas in just a sec. Many of you, we talked about VIX yesterday and why, I'm not that excited about the VIX simply because yellow boxes for life. That's right, brother. Make it as simple as possible, right, Tom? No need to convolute it with all this stuff. Put a box around it. Stay in the box. It's Schrodinger's chart. If you put your chart in the box, do you hear the chart? Oh, Pepe, you just want to get me fired up? I need more whiskey for that one, brother. No, you talk about Dogecoin. Notice the spike. Obviously, if you're trading VIX-related products, right, TVIX and all that type of stuff, there's huge potential. I personally don't trade those instruments. I don't know why. I haven't and I don't. So I know some of you might be trading TVIX and the different VIX products. Certainly great opportunity. Today you had almost a 10% move up in the VIX. But remember my cutoff points, 20 and 40. Well, we're at 24. So I would argue this isn't panic yet. But if this momentum in the S&P continues and we start to see this really break down, let's say it gets down to 3,700, VIX is going to start to surge and really start to spike from there. VIX will start to surge and spike from there and maybe get us up to 40, which would be fine with me. Dollar index. You had a slight little pullback today on that dollar index, which came right back down to the origin of Tuesday's move. Hit it, bounce right back up. Let's see next week if we can get below that 104 mark. That's kind of an important one for that dollar index. And then we'll look at some bonds here. Boy, the 10-year really just dropping aggressively the past two trading sessions. We were at 4%. Now we're at 3.7%. Again, part of the reason you're seeing that happen is because the expectation is the Fed is going to backpedal from 50 to 25. That's part of this one. Pretty exciting sell-off here in the dollar. Now, this also impacted our yield curve. So here is your yield curve between the 10 and the 2. It's closing the gap, but you're still making way more money by buying a 2-year versus the 10-year. And last one, natural gas, which had that huge rally up, and then all of a sudden it's just come screaming back down. There's your natural gas down 4.44% today. The question is, do we come back and challenge those lows at $2? Given the overall trend, it kind of feels that way. Boil. Well, if you're looking at natural gas, just put a double on it and call it boil. All right. So similar picture here. Boil's looking real ugly. That big gap down we saw on Monday really just broke the camel's back. I thought that was one of the, it was looking great. You had this huge rally up. Obviously, there's going to be some retracement here, which I was expecting. I didn't expect it to drop all the way down here. I actually thought we would start to see it maybe come back down to that 7 mark and move up. But here we are entertaining the $5 mark. So a huge decline in Boil. It's hard to be bullish on it, right? I got the bounce I was expecting. Unfortunately, I got stopped out too early. I didn't want to take any more losses, and it just rallied away from me. Oh, well, it is what it is. I'm not back into it yet. I have Boil in 2 other accounts, actually. I have a small position in a trading and competition account that I'm doing, and then in another one of my accounts, I actually do have some Boil, but not a ton. It's the main account that I really trade with you guys or use on this program is the one where I had that 10,000 shares of Boil and got stopped out, so that was tough. Now, BAC, good price is $22. Is it? Let's check. Wow, come on. So you're being a little bit greedy there. 22 is quite a bit a ways away. But, if you're looking at potential buy points, you could be looking at selling those $22 puts if that's what you believe. I personally would think you got a higher price. I would go to the origin of this gap right here, right? That gap that goes all the way back to, let's call it November 6th of 2020. So that puts me at $25. That would be probably the more attractive target for me. But again, this is why we love trading, right? Some different strokes for different folks, different levels. I might look next week and see what kind of premium I could get if I was to sell the $25 puts for Bank of America. Although, when you look at this chart, do I like Bank of America? I hate Bank of America. I'm just looking to make money off the trade. I'd much rather, if I have to say banks, and I don't like Jamie Dimon either, right? I think Jamie Dimon's a clown. However, he's the one driving the show there at JP Morgan, and I like JP Morgan as a company better. So I might be looking at JP Morgan, maybe sell those 116s, which is the origin of this last huge pop-up here. There's a couple different levels there, but I want to wait and see kind of how the dust settles for next week. Again, we have CPI, PPI, retail sales, Empire State Manufacturing Index. You have a ton of stuff happening next week. Yeah. Thanks, Pepe. Only 4 likes. That's all right. You don't have to like me. It's fine. You guys still watch, so I guess that's a sign that you like. But yeah, I think more likes actually help out the program. So for those of you who are sober enough, hit that like button, and I'm gonna start wrapping things up here. I don't have I didn't do the economic calendar stuff yet for Monday, so let me real quickly just bring that one up for you guys so you can see what's cooking on Monday the 13th. It's kind of a quiet day. As you can see here, there's really nothing going on for the U.S., and there's no really important earning ones to speak of next week. So Christopher says, gold or Bitcoin? That's a great question. Give me a little more detail, Chris. You say gold or Bitcoin, but in what context, right? All right. Are you bullish on gold or Bitcoin? What do you think is the best longer-term buy, gold or Bitcoin? What's the short-term buy, gold or Bitcoin? Because those parameters, be a little more specific in what you want, and I'm happy to embellish on it. Right now, I'm bearish Bitcoin. I'm probably one of the most bullish long-term people you'll meet on Bitcoin. But right now, I actually think it's going down. I think you're going to see Bitcoin continue to drift down. This whole banking thing, the whole fallout from FTX, the whole Mt. Gox auctions thing, the uncertainty with regulators and people like Elizabeth Warren who are just making it their primary focus, going after banks and crypto that onboard banks, onboard crypto. I think that just screams negative pressure for Bitcoin, unfortunately. And I do have a good position in Bitcoin, but I'm not going to sell, right? I'm a hodler at heart. So let me bring up my Bitcoin price chart here, just so we can look at some real data as opposed to staring at me. You know, you see where we've come from and where I did not expect to see this big rally up here that we saw back in January. That just didn't fit my idea of what was going to happen in the market. However, I love it because obviously that helped my portfolio. I do think you're going to come back and challenge some of these lower yellow lines I have on my screen here, which I'll update the chart over the weekend and make it clear. So I'm bearish on Bitcoin, right? Who is taking Bitcoin seriously now? A lot of people, it's just, out of all of them, Bitcoin is probably the best. There's a lot of other digital assets that are garbage that need to go away. There's a lot on this list, actually. So if I look at Bitcoin, I am bearish on Bitcoin. I'm bullish on gold just because of its historic relationship with inflation and market uncertainty. So I actually, at the beginning of the year, had a target of 2,000 on this one, which is going to be right here, kind of this peak that we saw from 2022. I do think you'll get back up to that 2,000 mark. So I'm short and intermediate term. There you go. There's your answer, Chris. I'm short and intermediate bullish on gold. I'm short term bearish on Bitcoin. Intermediate, I'm neutral to bullish on Bitcoin. And long term, talking 10 years, I could not be more bullish on Bitcoin. I'm very bullish on it. I think it will take some time. GD says Bitcoin is not a store of value. The reason it's not a store of value and the reason that you say that is because it has these incredible price fluctuations, right? You're like, how can something be a store of value when it's trading at $60,000 and now it goes to 20? That's not a store of value. The reason for that is you have Bitcoin is only in the hands of a few people. There's only 21 million Bitcoin. If it starts to gain adoption, El Salvador being a good case for that, you start to move the centralized holdings of Bitcoin. When I mean centralized, someone who's holding 1,000 Bitcoins or 10,000 or 100,000 Bitcoins, you start to move away that central control and you disperse it. And you're less likely to get price fluctuations from people constantly selling or buying based off momentum. If you have, let's say, Bitcoin in the hands of, let's say, 100 million people, which would be a stretch, I think, but let's just say 100 million people, they're more easily and likely to buy and sell based off what's going on in the market. But if I have Bitcoin, those 21 million Bitcoins spread over 1 billion people, the stability of Bitcoin's price chart is going to be way more stable. And the reason for that is it's in so many different hands, it would take collective collusion, meaning everybody's selling or buying at once to create those major swings. The only reason you're seeing such monstrous swings is because it's not in the hands of a lot of people. And it's starting to get that way. I know some of you bought $50 here, $100 there. GD says, and it moves with the market still. It does, but remember, this is so in its infancy. If it gets to the point that I foresee it being, and you look right now where bank accounts are being frozen, right? You had the Silvergate stuff, that account's frozen there. You've got Silicon Valley Bank, accounts going to get frozen there. Maybe even other accounts get frozen, some that might not be FDIC insured. That's a risk of centralized banking systems. Bitcoin is its own bank. That's a huge distinction and kind of changes the whole narrative. Is it is its own bank. It's just not accepted right now. And of course, regulatory pressure is going to push at that because they don't want it. The government absolutely does not want competition to the dollar because the dollar is their meal ticket. How can you fund an incredibly inefficient government that keeps overspending and overspending and overspending without really even giving a shit about how much money they're spending? They don't have to be held accountable. But Bitcoin, you can't make any more. So if that becomes the monetary system, governments, politicians are in a big world of pain. Fiat currencies help drive markets to the upside because you can constantly just create money, right? $15 trillion were pumped into the U.S. economy because of Federal Reserve printing between 2020 and 2023. I can't produce $15 trillion worth of Bitcoin off the snap of my fingers. It makes you accountable for your actions, which makes it a better money. If you can split Bitcoin, isn't the same thing as inflation? No, you don't split Bitcoin. It's just fractional. So there's 21 million Bitcoins, but you can buy 8 decimal places worth. So 0.000008. Anyway, I could go on and on, but you're right, JD. Right now, because it's so young and because it is tied to the current, predominantly I would say the U.S. market, it's going to follow the market. However, if it becomes utilized as a currency, I love what El Salvador is doing. I hope that more countries adopt it that way because every time people use Bitcoin as a transaction over there, you're spreading apart those Bitcoins further and further apart. More people hold it, the more stable price becomes. It's just going to be a matter of time. That's why I mentioned 5 to 10 years. I'm very bullish because I think it'll start to be more adopted then. I personally think it's a way better monetary system. It just lacks that store of value. It's portable, right? It's a medium of exchange. I think what may happen in the near future is instead of us cashing out, let's say Rob sends me some money. He sends me some Bitcoin, sends me $100 for the Bitcoin. Well, I might just keep that in my Bitcoin account, and when I need to buy something, I'll send Christopher, $30 for the Bitcoin. So all of a sudden, there's no need for me to go back into fiat currency, and we start to maintain this closed loop ecosystem of Bitcoin. That would be an interesting development as well, but again, it's all speculation at this point. I can't figure out how Bitcoin can drop $1,000 in minutes. Bidding I can see drop, but who would take such a bid? There's no market makers. Exactly right. You don't have institutional market makers. Remember, market makers are required to maintain a bid and an ask. They're required to be making a market. Unfortunately, with Bitcoin, there are no market makers. So you're kind of holding your hat on someone like myself who's saying, "Oh, buy some Bitcoin." Well, if you don't have a lot of liquidity in the marketplace where you're trading, you can influence that marketplace right there. You can look out there and find exchanges that they trade Bitcoin, but there's like $100 worth traded all day. Whereas you can look at another exchange, they might have $1 billion worth of Bitcoin traded that day. So if you are getting into the market, make sure you look at something with liquidity. Let's see. No, it's like splitting dollars into cents. Even more so, Rob. For example, I will bring up a calculator here just to show you the number. So Bitcoin right now is trading at, we'll call it 20,000. I'm going to round up. So if you want to know what the smallest increment of US dollars you can buy or sell, it's 1 penny, right? We know that. That's the bottom line, is 1 penny is the smallest. But if you look at $20,000 and I times that by 0.1234567 that's the smallest amount of Bitcoin you can buy, which is 0.0002 cents. All right, so anybody could own that much. That's what one Satoshi would be called. They call it a sat, right? A Satoshi would be 0.0002. So if you had 100 Satoshis, you'd have 2 cents worth. You had 50 Satoshis, it's a penny. And of course, that ratio is going to change over time. But again, it's all about adoption. And the way that these central banks around the world manipulate their markets. I had a guy yesterday was heckling us saying, "Oh, Americans cause the problems." Like, look, it's central banks around the world, man. It's the central bank of the ECB. It's the Bank of England, Reserve Bank of Australia, New Zealand. They're all manipulating their currencies and markets. There's a guy out there named Robert Breedlove, if you ever want to dive into more and understand kind of why this is such a revolutionary instrument, Bitcoin that is. Robert Breedlove has a podcast that he does where he talks about Bitcoin and its utility. And one of the interesting things I really appreciated about it is if you don't have a fiat currency, you don't have wars. Because you can't just print money out of thin air to fund your war. If you have to go to war with the money that you actually have, there won't be wars because governments will go, a waste of money. Now, I'm sure there will be some conflict, and depending on what they're fighting over, they might have wars. But really, it's kind of interesting that the concept of no wars, because you can't print money. You can't just make money out of thin air and fund your war. What happens to call put buyers of May 17 strikes of SPB? I don't know. If you bought a call, you'll lose all your premium because it's done, halted. If you sold the call, you get to keep the premium. I don't know. That's a good question there, Michael. Unfortunately, I don't have an answer to that one. All right, I'm gonna get out of here before it ends up being 1 hour, and I am really ending the show because I finished this glass of whiskey, but I'll officially finish it right there. So, no real economic announcements for Monday, no real earnings announcements for Monday, so it's gonna be a quiet one. I will go to JB, who sent in those questions, and I'll try to do some shows based off your topics, JB, so thank you very much. And again, for those of you who would like to have topics next week, I don't have any guests scheduled, so send in your requests, or just ask me questions, and maybe I can build a whole show about it. You can email me at TraderMerlin@gmail.com. Probably the best way to do it is to go to any YouTube video, put your comments down below the YouTube video. That, I think, helps my search results or whatever. There you go. Well, we had a pretty exciting week, guys. We had Corey Lane on the program. We had Justin Krebs in the program. We had David Warner on the program. We had a really interesting show on blowing up of the banking system, which came through today. I hope you guys enjoyed that one. Hope you learned something. Give a thumbs up, share, retweet. Hopefully, I'm still working on getting this program to get a little bit bigger and bigger, but that'll be something down the road. Anyway, thank you guys so much. If you're new, hit that subscribe button. I will see you guys tomorrow or on Monday. Take care. Have a great weekend. Go do something fun. I'll see you next week.